Hey, welcome to the Friday edition of The Hash. I'm Zach Seward. We got the gang here. We're going to talk about the latest in crypto news. We got Naomi Brockwell, we got Jen Sanasi, we got George filling in for us today. Thanks, George, for stepping up to the plate. George, you have the big story of the day, and you are going to start us off. The latest news from China. What's going on?
Yeah, classic China FUD, am I right? So the People's Bank of China announced that virtual currency-related business activities are illegal financial activities and warning that it seriously endangers the safety of the people's assets. So on that news, of course, we have Bitcoin dumping 4% and a whole lot of red across the broader market, including even in North American mining stocks, which doesn't really make much sense, right? If crypto is illegal and in China, now North American mining companies should take more market share. But this really marks, I don't know, the umpteenth time that China has banned crypto specifically. And to me, I would bucket that as completely unsurprising. This is the country that banned Google, Facebook, YouTube, Wikipedia, which is broadly viewed as one of the pillars of the free internet. But while I'm unsurprised, I do feel sad that so many people will be forcibly locked out of this ecosystem. And while this is a renewed ban, this time around, China does have the CBDC that's lurking around, ready to give, the Chinese citizen a quote unquote better alternative, which is really just a surveillance tool masquerading as a fun digital currency. So I have a mixture of I don't really care, and also I feel somewhat sad for Chinese citizens.
Yeah, I'll jump in there. There's, it's kind of interesting to look at the history of China bans, right? So for anyone who's tuning in who only got involved in the last year or two, well, it's Friday, which means that China is going to ban crypto again. And that's kind of what we come to expect in the crypto industry. But it's interesting because Dylan Leclerc tweeted something really cool, which was great point. Why did China only have to ban Facebook and Google once, but has to continue to ban Bitcoin over and over again? There might be a lesson there. And really the point that he's putting out there is when you have a centralized agency, sure, you can shut down a server. It's super easy. You flip a switch. But Bitcoin has been banned so many times in China and people there still use it, right? Because this is an uncensorable money. And sure, they can make it a lot harder for people to get involved with this. They can put up all kinds of firewalls and block certain services. But there are always technological workarounds and they're always being developed. So this isn't the end of Bitcoin in China at all. And the other point that you raised, George, which was great, when you said that, well, the reason they're doing this is because Bitcoin, it really jeopardizes the safety of the people's assets. Like, no, this is the way that the people were able to safeguard their assets. The flight of capital from China is astronomical. They're looking for anything that they can park their money in. Part of the 2008 crisis was China just buying up long-term bonds, right? Because it was a way for them to more safely store their assets, they thought, than keeping their money in China. They're buying up real estate all over the world, anything that can get their capital out of the country because they don't trust the Chinese government with it. So when they say that it jeopardizes the safety of the people's assets, they obviously mean the People's Republic of China, i.e. the state. It has nothing to do with citizens and protecting them, as we all know. But Zach, I'll throw it to you.
Yeah, I think it is a bit of a rehash of things we've seen before, but it is a bit more comprehensive than the ones we've typically seen in the past. They've gone to great lengths to specify what's going on here, and people who are looking into this are saying, hey, this might be a roadmap for adding additional friction to people's lives in terms of getting access to these assets. So while it is much of the same, the level of specificity here around mentioning Tether, around mentioning other assets is certainly notable in this instance. But it is interesting to see the market be fairly resilient, right? We saw a big drop off, but we're seeing that peak back up. Previous China pronouncements have done much more damage in terms of deep red candles, and I think we're seeing today, which is quite interesting. I'm going to toss this to you, Jen, for your thoughts.
Yeah, I don't think this is only a China problem. I think that as more countries start to talk about CBDCs, they start to roll out CBDCs, I think we're going to see a greater crackdown on crypto. To really push the narrative behind CBDCs. You mentioned, George, that these are really a surveillance tool that are implemented by the government. And if the government makes something illegal, many people, they don't want to do anything illegal. They don't want to end up in jail. They don't want to end up getting a fine. And so it deters people from participating in this free financial system. And so I think we're going to see a lot more of this happen around the world. And I think having conversations like these are so important so that people know that they can still access crypto, even if it's deemed illegal by the government. There is still an alternative to CBDCs. Naomi, I think I saw your hand go up.
Yeah, it's such a great point, and I'm glad you mentioned that. And Lena Zeicher actually mentioned on Twitter, she said, if you sell your Bitcoin because an authoritarian government doesn't like it, you don't understand Bitcoin. Bitcoin was never going to be something that governments embrace. Sure, if they're dollarized and they don't have a central bank to protect, like El Salvador, then they might embrace this because the alternative, is America inflating away your savings of your country. But most governments do have a central bank. They're going to protect that at all costs because it's how they pay for everything on their wish list. It's how they inflate away the savings of all the citizens. It's how they maintain control, because when you control the money supply, you basically control everything in society. So this is not the last we've seen of governments cracking down, but it should be a good signal to people that, this is exactly why Bitcoin was created. And despite all the bans we've seen in the past, Bitcoin hasn't disappeared in China. I don't think it's going to. And I totally agree with you, Zach, that they are being more specific. That crackdowns are getting harder. And I think you can expect more of that. And I think you can expect that around the world. It's going to get more difficult. But the fact is we now have a choice in currency, and it can't be shut down no matter how many edicts governments around the world proclaim. So it's both a scary time with these crackdowns, but it's also a thrilling time because we get to see in real time a complete paradigm shift in society. But George, I'll throw it to you. I saw your hand go up.
Yeah, small little point, silver lining here, where I hope this in a way brings more mass consciousness to the fact that digital is not the operative word here, right? We don't care that there's a CBDC. The digital part is not the part we care about. We care about decentralized permissionless. That's just sort of my point there. I hope that happens.
For sure.
Yeah,
Zach.
good point. And I think the thing to watch here is, I think you're right, Naomi, like whether this becomes a playbook, right? Whether this becomes the template for other countries looking to do the same. And then that story gets a lot more interesting. But you are absolutely right. We are writing the biggest story in finance right now, and we are having a good time doing it. All right, let's change gears. Who's got the next thing?
Yeah, it's a little more exciting news. I mean, maybe you like all the excitement of government FUD, but something that is probably going to affect all of us here in the United States and the rest of the world is Twitter, because we are all addicted to it. But they have apparently just rolled out Bitcoin payments on Twitter. You can now get paid in Bitcoin to use Twitter, which is pretty cool. So the idea is that Twitter is now allowing users to tip their favorite content creators. It's been rolled out on Apple iOS to start off with, but in coming weeks, it can be expected on Android. It's not currently available on the web app. But it's very cool to see them roll this out. They first of all experimented with tipping. I think they started it in May, and this was like a fiat option. And then Jack Dorsey has hinted that Bitcoin is going to be coming to Twitter, and now it is here. So let's dive into the details of all this. Zach, I'll throw to you to start off with. What do we know about this scheme being rolled out?
Yeah, this is a big deal. I mean, we've heard from Jack Dorsey quite a lot in the last year, even more about his infatuation with Bitcoin specifically, and this is him really putting his money where his mouth is. As you mentioned, it's part of a bigger push to monetize content creators on Twitter, and putting Bitcoin at parity with fiat options is really smart and really interesting. The specifics of this involve third-party services like Jack Mallers' Strike app and others. I think Cash App is also one of the ones that's supported. So these are sort of third-party integrations that make it easy to send Bitcoin across the internet to whoever you want. And I think that's actually quite notable. I think the thing with tipping, and we talk about this often when we talk about Bitcoin payments, it's great to receive a tip, but it's going to be interesting to see if people want to part with their Bitcoin in this fashion. But the ability for this to be easy and native to one of the biggest social media platforms on earth, super interesting, really interesting to see. And in a slight deviation from Jack Dorsey's, recent sort of Bitcoin maximalist stance, the NFT verification thing is also quite interesting, and that's going to come out down the line. So a lot to dig into here. I'm going to put you, George, I'm going to put you on the spot. What's your take when you saw this drop yesterday? It's kind of funny to look back, like 12 hours ago. It's like, yeah, Bitcoin, woo, Twitter's doing it. And then, here we are, China, trying to crack down, it's like just
that's no surprise anymore.
The whiplash in this space is so much. But I'm going to throw it to you, George,
out the candles there.
A look at those happier times.
Exactly. First off, shout out to Jack Mallers, absolute legend. And also apparently shout out to anyone named Jack in the cryptocurrency world. Maybe I need to change my name if I'm trying to make a big impact. I think it's awesome. Rolling out Lightning payments on top of Bitcoin brings Bitcoin back to its roots, right? Bitcoin started as a peer-to-peer digital cash, right? And now transaction fees are so high and it seems somewhat difficult to do casual transactions. And now with Lightning growing and lots of things need to happen to get Lightning to, be fully implemented. But the fact that Twitter is putting it out there and having it be a means for payment is awesome. And most maximalists get angry about NFTs, but I don't, right? If you don't want to spend money on NFTs, then don't. So I'm actually not surprised that Jack decided, hey, like we can get NFT profile pictures because that's fun internet native things. Naomi, looks like you have something to add on to that.
Yeah, I will mention when we say we're getting back to the Bitcoin roots of peer-to-peer, it's not quite what we have here with the Twitter situation. We do have third parties intervening here. If you look at the terms of service of this, information about you, including but not limited to your full name, address, the tip, maybe share with the recipient, others, and also third-party payment services. They could potentially, receive a portion of this. Twitter doesn't receive any portion of the tip, but third parties might. So it's not a peer-to-peer network at all. There is definitely an intermediary in here. But I think there are a lot of haters out there who is kind of pointing to that and being like, oh, why do we need these middlemen? Why do we need these custodial services? I still think it's super cool that this is being added to Twitter. I'm not going to detract from the fact that one of the largest social media platforms in the world is embracing and popularizing Bitcoin. I think that's cool, even if they don't do it in a non-custodial way, even if they don't give users full sovereignty over their funds. I think it's a huge step in the right direction and getting people involved in the crypto space. But Jen, I saw your hand go up.
Yeah, I thought this was super exciting. I'm so upset Will isn't on the show today because he did commit on this very show to tip me on Twitter in Bitcoin when the product rolled out. So I will be collecting my funds.
As
I have
if
to
Will
find that
Foxley
clip
is ever going to part with his tats. Come on.
Find that clip first. I thought this is super interesting because although Jack is exploring what a decentralized social media platform could look like, Twitter is still a centralized platform. And I just wonder what Facebook and TikTok are looking at in this project and what they might be thinking about. Is this kind of the future of social media? Are all platforms going to allow us to authenticate our NFTs that we use in our display pics and on our posts? We spoke about Grape yesterday, authenticating NFTs on Discord. And so is this something that centralized platforms are really looking at and trying to solve? And are Facebook and TikTok just going to copy Twitter? And are we going to be able to transact in Bitcoin on social media and authenticate our NFTs that we're sharing? That it's just like such an exciting look into the future.
All right, we're going to take a break. After the break, we're going to talk more about NFTs. We're going to talk about this Time Magazine NFT drop that went a little wild. And I am not going to ask George about the Elon Grimes breakup news that dropped this morning. I'm not going to ask him about that. So don't worry. Stick with us. It's the Hash.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
As the company that launched the world's first ever Bitcoin ETF, we at Purpose chose the CoinDesk Bitcoin Price Index, the XBX, to price our assets.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Hello, everyone, and welcome back to The Hash, where we bring you the latest and greatest in crypto and culture. All right, so Time Magazine had an NFT rollout that was not ideal. There were a few hiccups that happened. So the magazine rolled out their Timepieces collection, which was just over 4.5 thousand tokens tied to digital art, each priced at 0.1 ETH. So each of these NFTs gave users access to Time's digital publication for, I believe, 3 years. Zach, correct me if I'm wrong there. I didn't write the years down, but I believe it was 3 years. Or do you know?
I'm just gonna look at the piece right now.
Okay, Zach's gonna fact check me.
I got you.
Okay, till 2023. There we go. The token sold out in a matter of minutes. Ethereum was clogged and fees raised to like super insane heights. So buyers spent 4 times as much on transaction fees than they did on the NFTs themselves, with one address paying $70,000 for 10 of the NFTs. Now, here's the kicker. The NFTs all pointed to a red time logo, but buyers, when they were purchasing, didn't actually know what digital art they bought. So they had to refresh yesterday, and with the assumption that when they refreshed the metadata, they would get access to the digital art they purchased. So this was a blind NFT buy, a lot going on here. Naomi, I'm going to kick it right down to you because your facial expression looks quite confused right now.
It's so confused. So, I mean, first of all, I wouldn't say that it's necessarily a botched rollout just from the fact that they clogged the Ethereum blockchain. I would say that's a great PR move. You know, our pieces were so high.
Not ideal.
Not ideal. Well, I mean, it is kind of ideal to get all kinds of press, you know, saying that the fees spiked so high. This was the hottest thing of the year. Everyone wanted one of these timepieces. But what is startling to me is that people didn't even know what they were buying and just buying things up, and all they had was like the time logo. That's fascinating to me. Like, so that is kind of a less than ideal rollout, not telling people. Like, was this deliberate on Time's behalf, or did they just not know how to add the correct thumbnails so people knew what they were doing? Like, was it meant to be a blind auction?
It's unclear. Times president did say they had a lot of learnings during this rollout that they would attempt
we know what
to address during the next
right?
rollout. Yes. So while it's not clear, it's kind of clear.
It's kind of clear. So yeah, I mean, this is kind of interesting. Time Magazine is obviously, I mean, it's an institution. And again, if Will were here, he would fight me on the word institution because he doesn't like that word. But, you know, it's this institution, American culture. Everyone knows about it, and they're getting into the NFT space. And it's probably a sign of more of this stuff to come as more of these players that have nothing to do with crypto start to get their feet wet in this industry. I think the learning curve is going to be steep for them. It's going to be amusing for all of us to watch it play out as more of this kind of stuff happens. But I'm glad they're getting involved. You know, I think that out of like a lot of NFTs out there, having a collectible NFT time cover page makes a lot of sense to me. People collect those things in real life because they mark some historic moment in time. And so translating that to the digital world makes sense. So I think it's cool that they're exploring this space. Maybe they should move a little slower and just kind of make sure they don't make any giant errors as they go forward if they're still learning. But Jen, I'll throw back to you.
Yeah, so according to Etherscan, the 100 addresses with the most NFTs own 24% of the NFTs that were launched in this timepieces launch. And so, George, I wanted to get your opinion. We talk about NFTs carrying these massive prices, being inaccessible, you know, people who just have a bunch of money to spend on NFTs and activate bots to just like pay out the priority fees and gobble up all of the NFTs are doing that and making them inaccessible to, you know, people who are just getting into the space. What are your thoughts on that?
Yeah, my thoughts on that is, do these NFTs need to live on Ethereum? Does Ethereum really want to be the chain that has the really expensive NFTs with really expensive gas fees? Or do they want to be this hub of DeFi, decentralized finance, crazy flash loan stuff, right? So are they going to start moving to the direction of just being for the very wealthy crypto people that can afford the gas fees? Or are they going to try to say, no NFTs, Solana, you can take the NFTs, they're free on Solana, anyone can afford them, and we're going to start doing more quote unquote serious things? I think it's kind of interesting to see like the first layer battles happen between Ethereum and the other layer one smart contracts. Admittedly, something I don't spend a lot of time thinking about, but a little bit of time. But Zach, seems like you had a good idea as I was speaking.
I think it really is about the base layer thing here, right? Like, which layer will have which NFTs? Like, which layer is going to have like the OG crypto art, and like which layer is going to have like the big brand NFT activation? And I think there's a lot of competition for the latter right now, whether it's Solana, Tezos, Polygon with the autograph platform from Tom Brady and DraftKings. I mean, we're seeing experiments happen on other networks that are maybe a little bit more mainstream friendly at present. So it's interesting to me. Again, this is a story about the base layer wars and who's going to have what as it relates to NFTs, DeFi, and any other sort of crazy applications that we're not even anticipating at this point in time. Naomi, last word.
Yeah, I will say just in response to George's point, I don't think it's going to be something that Ethereum will ever relinquish. I don't think it's going to be like a conscious decision to say, okay, you guys take this. I mean, they're sitting on a gold mine right now with all these people flocking into the space. Really, they created this NFT boom. I do think it is going to be a battle, though, and it'll be a question of whether users